morning, traders. Welcome to the TMT Stock Market Strategy video for Wednesday, August 17th. All right, markets gave back a little bit of the gains from making new all-time highs from the Dow, the Nasdaq, and of course the S&P 500. We sold off a little bit, but the thing is that we did gap down, and that was pretty much most of the move for during the day. Very little price expansion yesterday, and again, it is the summer. You have to take everything with a grain of salt, even when moves are happening to the downside. Now, we did have one down day. I'm going to go over the charts. I want to show some VIX, show you the VIX. I want to show you the VIX for the Russell, which created a sell signal for the Russell 2000, and we'll see if that's going to happen today. But interesting, nice and refreshing that the markets did happen to sell off. No, I am not looking. I'm not a perma bull or a perma bear for that matter. But it's nice to see when markets just grind higher and do absolutely nothing all day on a consistent basis. It's very boring. So when you have an expansion, when you have an increase in volatility, you have an expansion in price. And that's what I'm looking for, right? Because as traders and day traders, you want a big move in volatility so you can get that expansion in price, meaning movement in price. When you don't have no volatility or a very low volatility environment, you get what we've had in the last, let's call it month. So it's very, very boring. And that's, again, to be expected. So we just have to sit tight and just kind of, work off whatever the markets are giving us, good and or bad, and just sit tight and wait for opportunity to come. So yesterday we had a gap down. Again, most of the move happened on the gap down at the opening, and we did have a little bit of a sell-off at the end of the day. So let's get right to it. We have the VIX here. You could see had a real nice day yesterday. I am personally looking for a bigger move, a big expansion move. Now, today again, we could have a rally again today. We do have monthly expiration, which generally have a bullish bias to the week. So we'll just happen to see what happens today or tomorrow. Maybe we get a little bit of selling today, which was Wednesday, and then tomorrow, and then we have Friday, which is generally thin to win. Markets generally just grind higher into the close on Friday's monthly expiration. So we'll see. But we do have positive divergence building in the VIX, and you can see that clearly through our RSI, MACD, CCI, and of course our stochastics. Here is the RVX, which is the volatility index for the Russell 2000. And you can see here what we like to see is our Bollinger Band breaking lower here. Let me actually change that and get an arrow. You could see that arrow right here. We closed out of the band, and then yesterday we closed back in the band, creating a sell signal for the Russell 2000 ETF, a buy signal for the RVX volatility. Now, we do have a close outside of the band in the VIX. Let me just bring that back real quick. We did close outside of the band here, as you can see, and then we closed back in it with the black candle right next to it. So we've been on a buy signal really for the VIX, but it's very small. It's not as pronounced as the RVX. So you could take that either way. If you want to take that as a buy signal, meaning that would be a sell signal for U.S. equities. TMT's trading model is again still neutral, but now leaning more and more bearish. Once we get that sell signal confirmed, we will give you guys a heads up, obviously. Yesterday, we had some currency wars. We had some dollars shaking up a lot of the majors. You could see the UUP index broke down pretty hard. Japanese yen surged. The Canadian dollar surged. I mean, every other currency every other major marked against the dollar was just surging yesterday. So currency wars are here, guys, and this is going to affect what? Gold and commodity prices, right? So let's see what happens here. Let's take a look at the gold price. Now, we were looking for lower prices, and we are still looking for lower prices at the moment. But if we do get a decent pullback or a sell-off or any type of fear, that gold trade going lower will not pull back. Okay, maybe get a little pullback to the 50-day moving average, but I think it's going to be very shallow and limited if we start getting fear creep up into the marketplace. Okay, so gold short again is a very difficult trade. If anything, I would be a better buyer on dips in gold rather than looking to short gold. Okay, but you could see here clearly gold was bid up based on the dollar weakness, and if we continue to get dollar weakness, you will get commodity strength across the board. Here's the GLD, and again, we're looking for that 38% retracement and ultimately right down to 61.8% right here, which is that double top formation that measures down to 120. You could see here our MACD and RSI still pointing lower, so momentum is still waning. But again, guys, that could change easily on any type of move in fear of the markets. We're looking for the GDX, same thing. You can see even on the move yesterday, we really didn't get much movement in GDX. So GDX is a better candidate for a quick short down to the 38% retracement, which coincides nicely with this uptrend line. So just keep an eye on that. And then ultimately that 61.8. But let's get to the 38 first to see where we go from here. That would be a breach of the TMT's proprietary trading channel here. So I'm watching GDX closely along with the dollar. And this is the S&P. Let's get right into the index. I showed you this on Monday. We marked possible 5 waves up, meaning a completion of the uptrend in the short term. We did get an outside day reversal, which telling me that price is starting to expand. Clearly, we're looking for a gap fill here. First of all, that would give us somewhere around 216 and a half, and then ultimately testing the 214.50, which would be this low, this candle's low here, and then we would reevaluate it. I ultimately think that we get down to about 210 at one point. Now, I don't know if the ES challenges 2200 first before we get a clear reversal back down to the 210, and that would be 2200 here in the SPY. Or do we just get down that way and we just start to move closely to that area? So that's yet to be determined. And again, that's by measuring and watching what the rally, excuse me, the sell-off or possible pullback would be. Here's the 60-minute spiders. I showed this to you yesterday. That watch here, we do have 5 waves that have completed bearish rising wedge. Now we did break that wedge, so that has confirmed. That's confirmed lower, but you could see here yesterday we had the gap lower, and then what happened? We stayed right in the channel pretty much all day, and then the end of the day, which no one looks, you shouldn't be looking to take trades the last 2 to 5 minutes or even a half hour of the day. Not enough time to make the money back if you are in a loss. So you could see momentum is obviously waning, and you could see here that most of the gap happened on the opening. So most of the decline happened on the open with a couple of small pops here and there. So not much to do yet again yesterday. But again, be ready because you could see that we're starting to get expansion of price. So we had an increase in volatility. Transports really didn't do much yesterday, although it was up, believe it or not, slightly. I still think that this here, if the transports does not get ready or starting to pop above this horizontal line, taking this local swing high out, I think that the transports are going to be one of the key factors in the market sell-off. IWM, again, reversed yesterday. Still within an inside day, but looking for that gap fill. Easy to the 21 EMA, and then, of course, right back down to that 119.75, 120, call it. Okay. And lastly is the Qs. And again, guys, I'm just showing you this. These are one of many of our premium video subscribers, what they see on the daily, but we show you on a 15-minute as well. Actionable support resistance areas where you know where price will either stall, reverse back, all right, or come down to and bounce. All right, so this is something that you should be checking out. It's worth it. It helps you out in your trading. And it gives you a lot of the homework done for you. All right, Qs, guys, you can see here. So we're still within this uptrend channel, but if we breach that, we're going to go right down to that 116.30. So we'll see what happens today. Have a great day, everybody. We'll see you tomorrow. Take care.